So we're going to cover February 1st, 2024, because there are just a number of aspects of the day that were good learning for us, a little bit on executions and setups, and just overall reading of the action. And before I get into that, talk a little bit about where we came from. So I've got ES here, and I want to draw your attention to this prior 2-day balance that we had here after this large breakout move the prior week. And so from the 2-day balance, we then made a 3-day balance, broke that balance to the upside. And this was just, the end of Monday, consolidated on Tuesday. We gapped down on some earnings back into the 3-day balance. So the first thing to make note of with balance ranges, we've talked about look above and fails. Once you have entered a prior balance, the probability is very high that you're going to test the other side of the balance, which is roughly here, I suppose, at the absolute extreme. This candle here is actually after hours. So this to me was a look below and fail of this 3-day balance, which happened to test the value area high from the 2-day balance. And you can see that we gapped up that following day to stay within this 3-day balance. So back to, the day before today, Wednesday, we gap into the 3-day, we come down, we test the bottom of the 3-day balance, which again, this is the absolute bottom here in this wick. Basically same as this wick here, just peeking into this 2-day balance. We don't want to go into the 2-day balance. We rip right back up, probe the top of the 3-day balance. So a decision has not yet been made. Once that decision is made, we now enter the 2-day balance. Where do we head? This candle, lower wick, heads basically right down to the bottom of the 2-day balance. And then what happens after hours? We knife further, which some of this was cleaning up this gap here. We had an open gap there. But this is what I saw as excessive. This was the into the close, 30 minutes. So this was the spike. So actually, the spike base sat right at 75.75 from Wednesday. So that was the prior low of day, prior to making that new low. After hours went even lower. That was even more excessive. But basically, this day should have stopped roughly here. Maybe taking these lows, filling this gap, and then closing back in range. And we did end up going just a little bit further. So the question then coming into today was, okay, are we going to accept these prices below the Wednesday spike, which would represent the bottom of the 2-day distribution, which then implies Friday's range, which has terrible structure. So that's how bad it can get and how quickly. Just move that level. That's how bad it can get that quickly. But the thing is, if we reject this move into this past Friday, and we find acceptance back in range of the 2-day balance, we now have a look below and fail of the 2-day balance. So your target would be the other side. Maybe you hit value area high. Maybe you hit the high of the balance, okay? And within that, you're playing off the prior day's profile as well. So you have to look at characteristics of the prior day's profile. But so that brings us into, today, and again, why I wasn't super bearish, because if we were holding bids in this range here, you can see it just looking at levels. Even without the volume profile, you can see like some horizontal support right around here. And again, I went with 75.75 because that was the proper spike, but it's basically the value area low from this range as well. I could have gone all the way to the bottom. I could have used, the Friday high would have worked. That's here. But you get the idea. This is the range that needs to reclaim and bid. That keeps us within here. And then it opens up the entire 2-day balance, break above 2-day balance. You see, that's what we did here. Break above, bid it, and we fill the 3-day balance, right? And then we got some more after hours, after earnings. So that's how balances work. You re-enter a balance, there's a very good chance you're going to see the other side of it. Sometimes important to look at SPX as well. So this is SPX. So what has happened to ES since we traded here last? Well, we've had contract decay by a few points. So ES is lower. So ES actually came down and filled this gap. SPX did not. Looking at SPX, it should be pretty obvious that this is probably a very important spot, right? And so that's right where we tagged. So it's hard to be bearish as long as we're holding this. If we're holding this spot, then we can just very easily, same thing, rip back up here. And this could end up being a giant balance. So I had shown some of this on a video from December of 2023. Same exact thing happened. We had a massive liquidation right down to the bottom of a balance range, and then we ripped right back up. We ended up filling out this balance range and then breaking out to the upside. So that's what brings us into today. So I've added back on extended trading hours, and the first little clue that I want you to make note of is after hours on Wednesday, the close was 71.75. We gapped up in Globex, did not fill this gap. We did not touch the close from extended trading hours after hours on Wednesday. This is sort of a warning sign if you're a seller. And so you should lock this away because, I mean, these gaps fill like compulsively. You have to keep in mind that most of the trading is all electronic, it's algorithmic. And I mean, there really is a compulsion to fill these gaps. And so the fact that it didn't is suggestive that sellers are not particularly strong and not particularly interested in entering that last couple Fridays ago range. So this is why this was the key level, this key range to hold us in the 2-day balance for me into today. So you can see almost the entire overnight session trades above that range. One quick excursion below and no interest there. And again, trading higher the entire night. Now I've taken 89 off and I've replaced it with 82 and a quarter. Now, 82 and a quarter was actually the volume point of control for this 2-day balance range. So if you can't comfortably offer 82, then you can't retest the value area low. If you can't retest the value area low, then you can't get into that Friday's range. So before the open, we had the short set up off 95.5, and that was from the prior day's profile, not from the balance ranges. You can see it works nicely. Where does it come? Right down to 82 and a quarter, the volume point of control for that 2-day. So this is where I was saying, okay, we're going to have to cover this short if we can't make any traction lower. And the next target would have been, our spot where we would be covering. And then if no interest lower, then we have to look to go ahead and get out and cover. You can see right before the open, we got this nice little trap lower, which I hated, of course, because I was short from up here. So I covered a few. And then at the open, if we didn't see a drive lower really through this range directly, the short probably wasn't going to be that great, right? So that's where I'm just going to trail out, maybe have a trailing stop up here in place for the open because things can kind of blast off. So we open, we rip immediately, and then we get some conflict. So we fail the 95 spot again, so it still would have worked as a short, though, maybe with a little bit less confidence. And this is where I said the point at which we were consolidating here and we had not come back and taken out at least the open, if not make a lower low relative to this overnight low. The point at which we're consolidating here, you have to be very, very careful initiating a short because this could be leaving single prints for the day. This is the beginning of A period. And so if you're leaving 5-minute single prints and then you see continuation, then you need to be careful about looking for any of these other shorts that we had as possible shorts. Now, as it happens, we did get that conflict. So now it does not, at least as of this time, look like a trend day. We discussed that on a prior video. So it doesn't, as of now, look like a trend day. We then resume higher. We look above and fail the overnight high, pull back in. Even more so, doesn't really look like a trend day. We keep pulling back right into this range. So it's looking like we're forming a distribution in this range. We don't have enough time on the day to really put a whole lot of weight into the volume profile until the initial balance closes. We then make another higher high. So this is where we had our megaphone forming with RTH, however you want to draw it, is fine. And you can extend it, to the ETH hours. That's fine. But the bottom line is it doesn't matter how you end up drawing this thing. You could have drawn it back here as well. What matters is that you see that you're making higher highs and you're also making lower lows. So there's conflict. So it doesn't, at least as of now, look like it's going to be a trend day up. I mentioned that I took the IB close short from our other video. And again, the reasoning for that was because of this conflict. It doesn't look to me, even though this looks pretty strong, it doesn't look to me like it's going to be a trend day up just yet. Everything else from the prior day was still pretty bearish. We're still under a number of key levels. We had some supply sitting just above here. And so either this works and I get volume point of control, or we just rip and I have a stop for a handle. And so, sure enough, not only did we get volume point of control, we got new lows. So then it brings in like, okay, now are we going to sell into Friday's range, or is this going to be a long? So on here, I've marked the IB high, the IB low in blue, and I've just left one level here, 77.75. I actually used 78 just to be a little bit more certain, but 77.75 was the value area low from one of the days of the 2-day balance. I think it was the lowest value area low, if I remember correctly. So we don't need more than one because the point that we're looking at here is the IB low and our support. And we had talked about when I had all those levels on there, we had talked about how could have used really anything down to 73.5. You could have used that prior Friday's high way back here, really, as kind of the bottom of your support. That would have been fine. The bottom line is no acceptance down here, meaning no continuation down here, does not look like a continuation short. So I'll do a replay, but just with static candles, let's look at this first. So we get the initial move below the initial balance low. Then the next candle immediately opens and just sort of, again, from the other video, just chops around the IB low. It's not what a double distribution down is going to look like. For a double distribution down, you're going to need conviction selling below, and then continuation and an additional balance lower. You're going to need a very low volume node. Ideally, you want single prints on a 30-minute candle. So, this entire 30 would close here, let's say, and then continue immediately. That's what a double distribution down would look like. But we get chop around, we get one last attempt to sell it. That sell attempt is immediately rejected. And then here is where price is firming back up above this 77.75, 78 spot, basically sitting right at the IB low. So it's very, very clear here that there's no conviction selling. So let's put the volume profile back on real quick. So we've already talked about, on a developing days profile, if we are trading below value and it is not a multi-distribution trend day down or double distribution day down, we should be buying every single time. We should at least be covering our shorts, if not flipping long. And so the point at which you get this chop around the IB low, again, this is just reiteration here, you're very, very much paying close attention to the possible need to flip long and cover your shorts. You see this inverted hammer here. This is a good example, and really here too, okay? So you get selling, selling, selling. It's going nowhere. We finally get some aggressive selling that makes a new low, immediately snapped right back up. Trapped, trapped. Clearly there's a bid here. This next candle, inverted hammer, again, slam, slam, slam. Goes nowhere. So to me, you could enter really in this candle if you wanted to. This candle is probably a little bit better. This candle works as well. There's a number of different executions you can take on this. Now keep in mind, executions are different for the different types of trades. Additionally, risk management is different for different types of trades. So if you just stick on the 5 here, and we can look at some other time frames as well, but like how am I placing an initial stop here? Well, if I enter in this inverted hammer, let's say I enter 78.75, you certainly need a hard stop. This move was rejected, so you certainly need at least to have a hard stop in place for 70, this low here, 74.5. And so that might be 3 handles. That might be pretty wide, but it's a hard stop. And you could sort of make the decision that if this then flushes, goes red, comes into this wick, this bid just walks away, you could just manually, hit the stop button, and that's fine. But at least some kind of a hard stop is reasonable there at low a day. And again, why? Well, it does not look like a double distribution down, and so therefore you should be buying below value for the day. So that's one type of trade. There's not really any great price action below you to work against. There's not a 5-minute demand, 5-minute rebid to work against. But you know that if you do see continuation below this low, that you're probably in a little bit of trouble and you're going to have to reassess. And it would be a situation where if you wicked lower and then we still rejected back up to the IB low, it's a situation in this case where you could potentially try again. Now from there, let's say you do enter. Now your first targets are going to be developing value area low, volume point of control. We had some VWAPs in here, overnight and RTH, and then developing value area high, and then high of day. So those are your targets, and you can make decisions on your own about sizing, how much you're going to take off at each spot. But again, sometimes the price action itself can help you to make that decision. And so when I see this sequence, again, this was from Riff on Price Action video, when I see this 3-bar up sequence that blasts straight through value area low, developing value area low, with absolutely no attempt by sellers, that looks pretty strong to me. I'm still have to take some off at the point of control, at least, right? If you had something like, let's say you're trading micros, and so you have like 10 MES so that you can scale instead of 1 ES, because not everybody trades multiple ES contracts. It's a lot of leverage, and so maybe you decide to take 2 off at value area low. It's your first target, and then you move your stop back to even. Something like that works to me, because again, the goal on this trade is a complete traverse. That's really your target. You're only taking some off, like just in case it rejects here and comes back. If you wanted to take none and just set a stop to even, you didn't lose money. That's an okay trade. I still like, covering fees personally, but it's understandable if you don't, if you see the strength of this sequence and you decide to hold to volume point of control, and that's your first trim, and maybe you take 2 there, maybe you take 30%, 3 of them, maybe you take 4. It just depends. Sometimes you're having a great day and you're already super green, and so maybe you just take 2 out of 10, like 20% or a quarter of your position, whatever it is. Maybe you take that off here, and then you're targeting value area high for most. You can't assume that we're going to break out and then go double distribution up. You certainly can't make that assumption, but that's where you can hold some runners. You should have most of it trimmed, value area high, new high of day, and then you're watching the action to see what plays out from there. So again, we'll just look at this with stagnant candles, and then we will look at a replay. And trading move replay is not fantastic, but you can see the difference here in the level of conviction on this break. See this move here. We did leave a little bit of an upper wick, but that was well above high of day. This as compared to indecision doji, followed by chop back within the initial balance, right? This was an explosive move higher that makes new high of day, potentially leaving single prints if it continues directly, which it did. And so, any of this, could have potentially been single prints on a 30-minute. We did pull back. And so then let's talk about, entering a trade on the back test of the breakout. So if you're in this trade, I mentioned this today in the Discord. So to me, I don't care if you're seeing this, I don't care if you're seeing this and you think it's amazingly strong. If you're entering a trade here, or like in the middle of this candle here, that's just a terrible trade. 99 times out of 100, that's a terrible trade. You can look back in hindsight and say, oh, well, I saw the strength. I knew it was going to do it. But yeah, that's bullshit. That's a bad trade. On the flip side of that, it actually is a better trade, a safer trade, taking along up here once you've sort of confirmed this. And so, from there, the question is like, where do you stop out in this type of trade? So where's the stop going to be? And so, first situation, you're long in here and you've got runners. Where are you going to place a stop? We certainly don't want price trading back into the IB. Now, like, is one wick okay? Sure, it is. The first place that I would be watching, we've talked about this as well, the initiation of the sell side impulse that took us back to the bottom of the range for the day was, let's see, 99. So let's slide this down just a little bit. 99. You can at least give it a tick or two, right? And so maybe you hide your stop. Again, you're long runners here. And so hopefully, you're in down here. You can give it more room, right? You don't have to put it, one tick below here. You could give it, the prior developing value area high, which I'm sure maybe has moved by then. Okay, so now you've got, 98. You could put it at 97 3/4. And, if you're in anywhere in the 70s, that's a pretty good trade. And if you miss out on like a handle or two on a stop run, it's not the end of the world. And if this does explode back through and come all the way back down, at least you're stopped up here, or at least for part of it, right? You put a partial stop there and a partial stop, somewhere else. That's fine. So from there, we stall at 49.10, which we had a level, kind of that 49.10 to 13 range, really 49.10 though. That's where all that aggressive buying had taken place the prior week. So if those buyers have now become sellers, we certainly have to be watching for that. And so we stall and make a pretty deep test, but we did not come here all the way down, even to the IB high, which should now be considered support because you've got all these trapped sellers in here. So a long in here is reasonable. Execution on it is a little bit tough, but like to me, it's probably okay just to take it as close to 49.01, 4900 as you possibly can and set a stop for, 98 and risk 3 handles or something. I think that's fine. Probably a little safer is to wait for some kind of a reversal. Even this 5-minute reversal, higher low, higher high, is okay. But again, then where are you entering? Probably 3 or 4, which is okay. But now, are you going to let it come all the way back down to 98? Now you're risking 5 or 6 handles. Maybe not. So this was potentially a tougher execution if you did not have a trade. So you've got to have conviction, and the conviction comes from the fact that we had this aggressive move. It was very decisive. So odds are we are not going to go back into the prior range based on this action. So I'm okay with that. This certainly was scary if you're in here, and this is where you get stopped out if your stop is too tight. This went what? One tick? Yeah, one tick into the initial balance, and it hit that that initiation candle to the sell side, and it held because pop sellers are now dip buyers, and that works. So really, here is a potential entry where you just sort of like take it when it's coming in hot. And again, like your stop is set even before you take it. So like you buy 99.5 and your stop is 98, like that's okay. Again, you feel like this is pretty clean because of the way that we moved out of that range. I suppose that's okay. It's not really my type of trade. The other entry would be to wait for, again, the reversal, and you could probably see this better on the one, so we'll look at that in a minute as well. But you can go ahead and get long here, and then certainly from here, there was a lot of chop. But, if the trade's good, the trade's good. You're going to develop a new distribution up here. We can even put that on there. So let's start it here. Let's come to this candle because it's probably where it looks pretty ugly. So you can see within this new distribution, below value area low, there's aggressive buying. Above value area high, aggressive selling, right? So it's the same concept, and we can drag that out, and you can see what happens with the value area high. Again, aggressive sell response, aggressive buy response. This is an entirely new distribution because it is a double distribution up forming, or multi even.